Hey everyone, do you ever wonder why your order block is often not mitigated, not touched, often ignored? What do you feel like you learned what YouTube is teaching you? You learned what the mentors are teaching you, but you're still not getting the same results. You see people enter on order blocks and you don't understand why they did. And even if they did, your entry is not the same result. It does not produce the same result. And this can be a very frustrating experience. So this is where order flow comes in. Today, we're going to learn about order flow as it is going to be the solution for this failure that we keep facing. You have to understand that order blocks has become more and more famous. Almost more and more traders are learning about order block. If everyone just places limit orders at where order blocks are, then everyone will become millionaire. Everyone can become a trader. So there's the difference where the market institutions have upgraded something called order flow. It has always been around, but nowadays more and more order flows are being respected and less order block is being respected. And if you don't know what order blocks are a bunch of limit orders where it is accumulated. So, what is the difference between order block and order flow? The word order block itself should tell you that it is a specific price point where a lot of limit orders are accumulated. On the other hand, order flow has the word flow, meaning it is constantly moving, it is liquid, and so it has a specific area and is often altered by big transactions. So think of it as a very liquid limit order. And traders often use DOM to find it out, to find order flow, but we as smart money traders have another way to do it, which is through price action. So let's look at my chart right now, and there are three words that you can see here. I already introduced you about what order blocks are, also introduced you about what order flow are. So the next thing you have to understand is inducement. What is inducement? So inducement is when hedge funds or larger financial institutions they deceive traders by creating a price point where it looks like an order block, which is not. I like to call it a pseudo-order block, but it's just a fancy name. You can call it whatever you want. You just need to understand the logic. Okay, inducement, a trap, a mousetrap for traders, so called. So we often see inducement and we think, oh, there is an order block. So we often fall for inducement. So let us analyze what we see in this chart one by one. First, let's say we have a previous chart point, and this becomes our order flow. So what is order flow? How do we identify order flow? Order flow is our final buying power. And order flow consists at least two candles. At least two candles. Order flow only has one candle. So if there was two candles here, it would look like that. The highest candle, which is the last buying candle, would become the order block, where the entire buying area, which is the entire zone, becomes the order flow. Okay, is that clear? If you don't understand that, just replay this video. Okay, you have to understand this very basic fundamental understanding. The next thing I want to introduce you is inducement. So this is where inducement comes in. After we break below this area, we create what we call a break of structure. Once the break of structure is formed, we have a little bit of a retracement. This is when inducement begins. This is the start of inducement. We have to look at the market charts with cause and effect. So when we see moves like that, we don't see it like this. We want to view this. Let's say 1 day from now, what would this look like? It would become an inducement zone. We don't want to look at the market as it is now. We want to look at it in the future. Why is it creating the zone it is creating now? What is it preparing it for in the future? So if you can see past most traders, you can easily see that this is an inducement forming. When the first candle formed, you already knew an inducement is potentially forming, and it did form an inducement. Inducement is an area of consolidation. So once that inducement level was formed, we have another breaker structure. Now, most smart money traders are taught to look at the breaker structure, and if the breaker structure is strong, they would take an order block here. and they would put an entry, for example, like this. They would have an entry like this. They would short it and they would put the stop loss right above it. Some traders that know a little about order flow might do the entry right here because they know that this entire buying area becomes a level of buying power. But both traders are wrong because this is an inducement area. A pro smart money concept traders can easily identify this as the real order flow, and they are just looking at this part. Anything that happens inside here, they ignore it. They ignore it completely. They do not care what happens inside here. This is clear inducement. So, of course, this would be better understood if you look at real life charts, but you have to at least memorize what I'm drawing here because this is very important. So once everyone puts their stop loss right above this wick, right above the inducement, it gets triggered, okay? And it comes down again, and some traders might even FOMO take a trade, they put a stop loss here, and they get stopped out. This is the final liquidity grab, okay? And we can call it SFP, we can call it double top, doesn't matter, okay? This is when the real order flow is tapped right into the order flow, and then it shoots right down. So as a smart money trader, where we are looking to short is this. We put a stop loss here. Now there are two ways you can put your stop loss. The first trader can put their stop loss right below the order block and targets the low. The second trader can instead do this. Both traders are correct. However, you have to look at which one is better for you. It's not about the risk reward ratio, although this one has a higher risk reward ratio. This one has a higher chance for you getting stopped out. So you have to consider which entry do you want. You can even do an entry like this. So if this one gets stopped out, then you enter the order block. But it's essentially the same thing. It depends because one has a 4 risk reward ratio and the other has almost a 14. So it is up to you which trader you want, or you can just literally put like this. It's up to you. It's all your choice. This is not a right or wrong question. So what happens after this thing happens? Well, we make the same thing. We crash below this thing, we create an inducement, and once again, the real buying power is here. This becomes the order flow. This is the entire buying point. This area becomes the inducement. So many people are taking shots here and they're all getting stopped out again, again, and again until the market has really hit the top. Then it comes down. And this process can keep happening again and again. Okay, it will just keep happening. It creates an inducement zone and it goes all the way back up to the order flow, and then only it comes down. Okay, and there are many forms this order flow can take place in. It doesn't always have to come in this shape. It can come in many shapes. So you have to be careful not to only look at one side because it can come in many forms and shapes, and if you do not know how to identify them, then that's going to be a problem. Now today I did not use Bitcoin. If you watched my previous video, you will notice that I often use Bitcoin as my median example. However, today I choose Forex because Forex are trendier markets where it provides a better opportunity. So this is example number one, as you can see I quoted here. So this is the first example I want you to notice. If I drew out this entire zone for you to find the inducement, for you to find the order block and the order flow, can you find it? Can you find these three things? Okay, I hope you pause the video. So first, where is the order flow? The order flow is the top three candles. This is the last buying move. These three candles become the order flow. So what's the order block? Remember I said earlier, order flow consists more than two, at least two or more. Okay, this is the order flow. This is the order block. Okay, and it's very clear to me that this move up, this area becomes the inducement. However, we can clearly see that this inducement was simply a trap. Did we reach the order block? No. Where did we reach? We reached the order flow, which is here. Okay, you can consider three candles if you like to. So my way of entering is I would put these two candles and I would refine it. I'll place an entry here and I'll put a stop loss right above this thing. And I would target exactly right below this low. If you have better context, actually, you can easily target this lower low. And did the price hit it? Perfectly, it did. Okay, so this is how you have to identify the order flow, the order block, and the inducement in naked charts. Okay, uh, I don't want to be judging you for what you're using, but please, if you are doing smart money concept practice, I suggest not using any indicators, because when you use indicators, the second you put on indicators, for example, you put on EMAs, you put on a lot of stuff, it clouds the entire chart. For example, if I were to place multiple indicators, if I were to place the RSI and I were to place the MACD, and this is what I do. If this is what I put on my screen, immediately the screen looks so cloudy. Finding smart money concepts, finding order blocks, finding the right candles becomes 10 times harder. And I assure you, it is harder. So you can't even see what you're looking at. What is it I'm looking at? I don't know. So it's clouding my charts. So when you are not an expert and you're still doing the practice, it's best to avoid using literally any indicator. I like to keep my charts clean. So the second example I want you to see here, as usual, pause the video for 10 seconds. I want you to find the order flow, the order block, and the inducement. Okay, so order block, this is the inducement. Entire zone here becomes the inducement, and this white candle becomes the order block. Because the higher one is mitigated, this one is technically not mitigated. Where's the inducement? This is the inducement. Where did traders take a shot? Most retail traders, including me, not that I am, well, there are two types of retail traders. Most people are retail traders, but some retail traders tend to be really unprofessional. And they would often take trades like this. And clearly they saw hope. They saw a drop down, and immediately it spiked right through the entry. Smart money traders, on the other hand, are waiting for this move to be touched. We grab into this order block. Okay, as usual, your short can be here, your stop loss can be here, and your take profit can be all the way down here. Okay, so there are many ways you can enter this trade. So this is one example of the order flow and the order block being worked. So the next example I want to look at is the third example. As you can see, I quoted third here. So as usual, find the order block, the order flow, and the inducement. So the order flow technically is the entire zone here. So it's very big. So we're going to ignore the order flow and instead look at the order block. This is the order block. Okay. Now this is the inducement. Now, something is different in this example. Why didn't the market come down? Why didn't the market actually come down? Okay. So you have to first understand what is going on, the logic. That's why I say do not memorize patterns, because at the end of the day, you need logic. The reason why this order block, so-called this one, actually blasted right through this area is because there is no clear break of structure. This does not count as a break of structure because we're looking at something like this. That is what we call a break of structure. We do not have that. We have an interior level break of structure. In this example, we had a break of structure. We had a break of structure. In the early example, we had a break of structure. We had a very clear break of structure here. Okay, we even broke multiple structures here, and we failed to make a higher high. Did you see that? I'm not sure if you did. So in this example, we don't have that. Instead, we broke barely anything here. That was a poor break of structure. And the second structure broke after it has mitigated one of the fair value gaps here. And this inducement is actually what we call a pseudo-inducement. It's not even an inducement anymore because it's trapping traders into short, and it's even trapping traders from here. But if you're looking this at a different perspective, you would immediately see that there is liquidity being built up here. These are liquidity where people put their stop loss. This is where money lies. So this short was not a successful one. But let's just say you're a beginner and you didn't see this one because it's complex, it's hard to understand. But how many trades did we get right just now? 3. And we took one loss. Does that look like a problem to you? No. sorry, we took 2 wins and 1 loss. Okay, is that a better risk reward ratio? Let's not forget that every trade we take, we risk 1 to 3, 1 to 4, or even higher. So losing one trade is barely anything. So if this one will come in time as you will understand the market even better. But this is an example of when, well, there are times where you're a beginner and you're something advanced pops up and you don't know how to deal with it. And it's okay to get stopped out because you got a lot of trades win. Now you just got 1 loss. It's no big deal. Okay? So let's look at the fourth example here. This is an example of a successful order flow being used. There are times where both order flow and order block aligns. Okay, that's one way to look at it. The first order block that you can immediately see is this white order block. This becomes the order block. So very clearly, this becomes the inducement. This entire zone becomes the inducement. So most traders, what they're doing, they're placing longs and they're putting a stop loss right below it, and they're targeting a high, very high. They don't even want to look at it anymore. They just pull it higher and higher, and they get stopped out the second this market immediately blasted right through. Okay, so where is this? This is the order block. The green box is the order flow. The entire zone here becomes the order flow. Okay, it's moving. So what happens is, well, there are two types of traders as usual. If you are trader number one, you might just take a very safe entry, doing the very classic way of taking a very standard and a good trade that you will take, for example, like this. You might even go higher than this because eventually you did get a take profit. I think you did. Okay. On the other hand, the second trader might attempt to do something like this. They might do a very tight entry exactly like this, and they'll target like this. So second person got a 1 to 19, whereas the second person got a solid, let me see, a solid 1 to 9. Both are fine, but if you're the second type of traders, do keep in mind that you're going to get stopped out more often. Okay? So, in short, there are 3 types of things that you want to look out for: order block, order flow, and inducement. Inducement, order block, order flow happens everywhere in the charts. I can easily point out any inducement, any order block everywhere in this chart. It's everywhere. Okay, everywhere becomes the inducement. Okay, let me just give you one more example. I didn't prepare this example. I'm going to delete everything. I'm just going to draw out this example. Okay, I didn't prepare for this. I didn't script it. This is purely just me seeing this exactly when I'm talking. Very clearly, this is my order flow. Entire area is my order flow. Okay, this entire area becomes my my inducement. So very clearly, we saw the retail traders trying to enter here. They want to see something like this, but it didn't because it broke past right through the inducement area and actually came all the way down to the order flow. The order block might be something smaller because the order block is always in a refinement of an order flow. So remember this, an order flow is always bigger than an order block. So the entry was clear to me. I took a long here, I put a stop loss here, and I can target the top. Did we get the entry? Easily we got the entry. We don't care if the market is going up and down, very scary, because what we're looking at is the target. The market might come out, come down, come up, come down, and we might be so worried. What if our take profit or stop loss gets triggered? But have confidence in your own TA. When you know you're right, you don't have to be afraid. This trade becomes an easy piece of cake. Okay, the market can fluctuate 100 times and you're not even a little shaked by that because you know what you're doing. When you don't know what you're doing, when you don't know where the inducement is, when you're not sure what you're doing, that's when you get scared. Okay, so this is it for this video, and if you do like the video, please consider liking a video and subscribing to this so you can be informed of new content. I post every 3 days or once a week, so you can keep updated and notified. So thank you for watching. I hope to see you in the next video. Goodbye and have a great day.